Hey everyone, and welcome to Stock Market Today. It's Ali Corum and Ken Shreve here with a look at the market action with a day of strength, especially for technology and the Nasdaq today, Ken.
Yes, indeed. I think we're up 1.3%. Looks like volume's going to be quite a bit lower than what we saw on Friday, but not too bad. Nice percentage gain for the Nasdaq. So why not talk about two tech stocks of the three? Take a look at Synopsys, SNPS. Also take a look at Fortinet in the security software group, and then outside of technology in the financial sector, LPL Financial, looking pretty good here.
All right. Well, first, let's take a look at the major indexes. As you said, Ken, the Nasdaq up 1.3% today, leading the gains here. We have the S&P 500 also up about 0.7%. The Dow up 0.3, and the Russell 2000 looks like small caps fell today by about 0.4%. So the Nasdaq can really coming on strong, continuing this rally here.
Yeah. It's been a really strong rally. We noted the fact that it was able to get back above that 50-day moving average and the 14,000 level. I mean, now getting to that 200-day moving average is not that far away. So wouldn't be surprising to see if the Nasdaq continues to rally to maybe back off as it approaches the 200-day line. But so far so good for this confirmed uptrend. Still, when you look inside the technology screens, you're not seeing a whole lot of interesting charts because of the nasty sell-off recently, but breadth does seem to be improving a little bit. So I think the market's looking pretty good here.
Yeah, we're about 2.5% below that 200-day line. So it wouldn't take much to get us there. Doesn't mean we're going to continue to go straight up, though. I think that's the question now is what are we going to see from here, and what should investors be prepared to do?
Well, here's the challenge when you're looking at the Nasdaq. Anytime you open a screen of growth stocks, it's not easy finding actionable charts. So you have the Nasdaq strengthening and looking better by the day, but the technology charts out there are still, there's a lot of broken stocks. So we've got two today that look interesting, but they're sort of the exception and not the rule. So I'd like to get to a point where I'm looking inside the Nasdaq 100, or I'm looking inside the Nasdaq Composite, and instead of seeing stocks just so beaten up far off their highs, maybe find some good bases starting to set up. We're not seeing it fully yet, but if the Nasdaq continues to act well, we should start to see good bases form in the technology sector.
So still some work to do. Well, let's take a look at the S&P 500 as well, continuing its win streak here. It's already above its 200-day line, and it looks like the 21-day and the 50-day are now converging. So if we continue higher, we now want to see the 50-day line not only flatten and start rising, but for all of those shorter term moving averages to then get back above the 200-day and get some nice stacking action there.
Yeah, definitely. And 4,600 certainly is a level to watch for the S&P 500. You've had recent gains coming in pretty light volume on the NYSE, so it's just something to keep in mind. We've been talking about how volume is so important when you're gauging market health, and we did get volume for the follow-through days recently for the S&P 500 and Nasdaq that confirmed new uptrends. But looking at the S&P 500, just recently you've highlighted it there, just kind of moving up in light volume here, but seeing better action in individual stocks. We did have a very violent sell-off in oil and gas stocks today that have been leading the market for some time, but a lot of these names are still holding up a short-term support level like the 10-day moving average.
Yes, that's right. And now it looks like the next stop for the S&P are those highs from early in February and the 4,600 level. Let's also take a look at the Dow. It looks like potential resistance right around this 200-day.
Yeah, this is why we like to use technical analysis, or at least have a visual of what we're looking at. So with the Dow, certainly, this 200-day line could be a resistance level, and we'll have to see. But I wouldn't call it an index under major accumulation, just like the S&P 500 and the Nasdaq at this point. But we are in a confirmed uptrend, and like we've been
Mhm.
saying in recent shows, the uptrend has to be respected. And
Respected, yes.
yeah, and the fact that we haven't had any higher volume declines since the follow through day several days ago, that's a good thing for the market as well.
Okay, and taking a look at the 10-year Treasury yield as well, because what a move over the last couple of weeks, especially really kicking things into overdrive. Looks like down a little bit today, but off lows.
Well, yeah, the 10-year note certainly pricing in rate hikes by the Fed this year, and I think the last I checked that Fed funds futures traders are uh, thinking there's a 75% chance, maybe 70 to 75% chance that there's going to be a half point hike in May, and it may not be the only one. So you see the 10-year note tried to go down today. It did for a little while, and closed all the way up near its high. So this 10-year note still potentially problematic for the market, but to see the indexes trade the way they are with this 10-year uh, note yield heading higher, I think it's a good sign for the market.
Mhm. All right, well, let's take a look at some stocks, shall we? Kicking things off with S&PS Synopsys in the design software group, up about 4% today. So hitting its highest levels in a couple of months here as it works on the right side of a base. So perhaps starting to see more software names come back to life as the Nasdaq and tech overall is starting to kick things up a notch.
Yeah, I mean this is a base that's looking good. I don't think the stock is ready yet, but this is what we're looking for in the technology sector. How many of these tech stocks are going to be able to work their way higher, form the right side of bases? Like I said, there's a lot of damaged charts out there right now, but this one is certainly healing. Like you said, it's electronic design automation. Not only are they big in the semiconductor field, but also the software sector in general. So if we can switch over to the weekly chart here, and what I like about the look of this base is you've got two good support weeks right at the bottom of the base. That's where the stock, went lower and then closed furiously off its lows for the week. So you've got 2 weeks like that at the bottom of the base, and you can see the right side forming here. The other thing Synopsys did was reset the base count. So the
Right.
latest correction was sharp enough and deep enough to undercut the low of a prior base. So we would call this a first stage pattern. So far, the base is shaping up nicely, and if it continues to work its way higher and show signs of additional signs of accumulation, I think this is one that could work down the line.
So are you looking for some sort of handle to form on the right
Yeah,
side of the space?
yeah, seeing signs of accumulation as the stock is working its way higher. So we'd expect that to continue as it approaches the 350 level. But again, the stocks will often drift lower. They might form a handle. This one just looks a little early to me. It's not really, you can't really draw a trend line. Some traders may have bought today because it was able to move nicely above last week's highs. I'm just going to watch how this base shapes up, because I suspect it probably will shape up pretty good. And as it continues to form the right side, maybe an entry will come into better focus, but not one that I see right now.
Yeah, and as you said, it seems to be in an interesting space. If we really can start seeing the software sector get back on its feet, one that has that semi exposure seems like a compelling option if it can have the technical action to back it up.
Yeah, I agree, and I think the market is sort of anticipating that. Like I said, it's been a nice move off lows. You can see when it moved through the 50-day and the 200-day line, there was some nice volume there as it retook those resistance levels, and volume was not above average today, but it was nicely higher from Friday as it moved higher. So this one is definitely showing some signs of accumulation that I think we should continue to pay attention to it.
All right. Well, from design software to security software, that's where Fortinet comes in on our list today, up about 1.7%. Light volume as well. Looks like volume has been drying up a little bit, but it's approaching the 350 level. Is that an area you would consider the stock actionable, Ken?
Yeah, because here you could draw a little trend line and maybe get an early entry here. We've been talking about all the damage in the security software group, and there's really two stocks left standing at this point: Palo Alto Networks (PANW) and Fortinet, which is working its way higher. So there's Palo Alto, which is actually performing a little better than Fortinet at this point. But Fortinet's got those nice annual estimates. It's widely regarded as a major player in this group, and again, you've got a lot of stocks that are far off highs, still beaten down, but I think Fortinet and Palo Alto are the leaders for now. The caveat with Fortinet's weekly chart is, this is not a great looking pattern. I mean, you can't look at it and say, oh, wow, what a great looking base. This is a consolidation that's characterized by a lot of erratic price swings on the weekly chart, which we don't like to see, but we've seen moves out of kind of wide and what we call wide and loose bases like this work. So it's another example of a reset, just like Synopsys. Fortinet undercut the low of that prior base, and even though it's a bit erratic, this I think still can be a leader in the group.
All right. And speaking of leadership, it remains, I want to say, a long-term leader. We'll take a quick look at the monthly. Yes, you can see holding well above that 24-month moving average on the relative strength line, even though it has taken a little time off, but well-deserved rest for a stock that had just a huge move. Going back to that base breakout in late 2020, all of 2021, it was a huge year for the stock. So makes sense that it has taken some time to rest here.
I'll tell you what, that monthly chart, you see what a tremendous price performer it's been, and look at how it's held those gains. I mean, this thing hasn't even, really attempted to go down in a market that not that long ago was acting very weak. So Fortinet is still holding near highs on the monthly chart, and I think it's like I said, making a case along with PANW that these are the two stocks to watch in this group.
All right. And yes, we like looking at those different time frames to give that added perspective. And let's also take a look at LPLA in the financial sector. LPL Financial working on a cup base, a little bit of a V-shaped base here, Ken, but it's carving the right side of the base, and it's just 5% off of its highs from early in February.
Yeah, we get a lot of great market commentary from Ryan Dietrich, this is his company, LPL Financial, and LPLA is the ticker here. And yeah, it's kind of got a V-shaped look to it, but it has been a furious rally off lows here. And I think that this is a financial stock, investment banker specifically, that has a chance of working here. Yeah, the V-shaped base is not perfect, but we go through a lot of charts every day, and it's not easy finding charts that check every single box. I mean, every chart out there is going to have flaws at this point. It's hard to find the perfect chart. So LPL Financial isn't perfect, but I do like it how it has stormed off lows here, back near highs. This is a perfect example where a stock may drift a little bit lower, form a handle, and if this market can hold itself together, maybe you get a good solid breakout here.
Yeah, I actually think it would be preferable to look at some sort of pullback or handle here just because of how it acted the last couple of breakouts. It did get a little bit of traction in this September breakout, but it's not one that you would have wanted to hold as a position trader. Seems like, you would have just wanted to take the money and run after those couple of up weeks. Same thing for that upside reversal in late January. So perhaps looking for an earlier entry instead of a breakout. even though things can change after taking a break, just something to consider, that recent, personality of the stock.
Yeah, definitely. And if you go back to the daily chart, you can see here it will down for 2 days. It went down today, closed in the upper half of its range. So to me, it's showing good support. But if it can pull back to that maybe just right around that 180 level, thereabouts, and just the one little last shakeout before a breakout, I think that would help this stock a lot. I'm not so much concerned about the V-shaped a base here. I just think the positives outweigh the negatives. You've got great fundamentals. Look at those big annual earnings estimates. You look at its PE ratio based on its growth rates. It seems to be a
Mhm.
pretty cheap stock here that's got great earnings and sales in recent quarters and is back near highs.
Yes, and some nice support at the bottom of the base on that weekly chart, as you are always so great to point out. All right, everyone. Well, thanks so much for tuning in. We will be back with more tomorrow morning on IBD Live. So be sure you join us, investors.com/IBD Live, for all the details. We'll see you there, and we'll see you right back here tomorrow after the close.